Hey, everybody. It's Eddie from Tokyo. This is your cryptocurrency update from Japan, and the central bankers gathered last week in beautiful Sintra, Portugal. That's a resort town in the foothills in the Lisbon region. I think you're going to find the 4 minutes of clips informative and getting some of the key points out of their 1 hour and 15-minute discussion, along with a couple of laughs. There was Andrew Bailey of the Bank of England, Christine Lagarde of the ECB, the European Central Bank, Jerome Powell, the chair of the Federal Reserve in the United States, and for the first time, speaking English in an event like this was the brand new governor, Mr. Kazuo Ueda. They were interviewed by Sarah Eisen, who is CNBC's Squawk on the Street, and yes, she did throw some hardballs. Mr. Ueda just took this position in April, and he surprised everyone with his unexpected humor a couple of times. He has a PhD from MIT and was also an outside or an external board member of the Bank of Japan back in 2005 to 2007. We pay attention in crypto to the policy that these bankers make because it influences our markets so much.
We've been for a long time trapped in a zero inflation expectations equilibrium. So we've been trying very hard to move this to a 2% inflation, 2% expectations equilibrium. But it's still, as I said, we think less than 2%. We hope to make sure that it's going to go up to 2%. For ourselves, we haven't had any serious monetary tightening for 3 decades. I was a board member of the BOJ 25 years ago. Then the policy rate was about 20, 30 basis points.
Wow.
Now, minus 10 basis points.
And it doesn't sound like it's changing anytime soon.
So in terms of that, the lag in the effects of monetary policy could be at least 25 years.
Yes, for more than 25 years, Japan has been trying to achieve some sort of inflation, which has been quite a struggle because of the stagflation, which is not so funny, but I found it fun to see his personality and humor. And it didn't stop there. The next clip is Andrew Bailey of the Bank of England speaking about the digital pound, and Mr. Ueda shows again his lighter side.
We're actually also working on wholesale digital money and completely rebuilding our wholesale payment and settlement system in the Bank of England to enable what could be a complete revolution in the infrastructure of financial markets and trade finance. And this is very exciting. So we put the wiring in the weekend before last. The engine should go in next year, and this has enormous potential to change the world and at the wholesale level as well.
As other central banks are thinking of issuing digital monies, we are taking a different route, and we have decided to issue new currency bills starting next year.
You're going all in paper.
This will cheer up public's confidence in the BOJ. more seriously,
yes, Japan will get 3 new notes by September 2024. I think the designs are very beautiful, and especially the 1,000 yen bill, which has the Kanagawa Okinami Ura, which is the big wave off Kanagawa that I think everybody recognizes from the series of the 36 Views of Mount Fuji, a Japanese woodblock print series by Katsushika Hokusai. The security features are pretty high-tech with a 3D hologram and high-definition watermarks. I think I'm going to miss every country's currency when we finally retire the paper, which I think eventually is going to happen. The artwork is always wonderful, and the choice of colors and the representation of each country's culture comes through on their currency. On this long holiday weekend for the United States, we have a mixed market. Bitcoin is hanging in above 30,000 still. And there's one crypto in the top 100 by market cap, Flow, that stands out with a 27% gain on the last 24 hours. I do believe it is because on July 5th, the FlowStaking smart contract will be upgraded. So less than 50 tokens, you will automatically be unstaked. In order to continue to receive those rewards, you must have a minimum of 50 tokens. I think that's driving the sales right now. Darren Moore had Craig DeWitt, the former product manager from Ripple, on his channel just the other day. And they were having a great conversation about payments, of course, and talking about FEDNOW going live. You'll like this.
With all that being said, though, I believe the Fed actually has announced the FedNow platform, right? That's live now. So we do have real-time payments as we speak, or is it, I think it's coming up soon or something. Does that make Ripple's work easier to do? If, you know, the last mile type of situation, having that upgraded infrastructure going from one corridor to the next, does that make everything easier and smoother?
Yeah, so starting with what FedNow is, I like FedNow because it starts to offer a level playing field. Historically, commercial banks like JP Morgan, who have accounts everywhere and a critical mass of accounts, have been able to do things just on their internal ledger that other banks can't, namely instant transfers, because that's just ones and zeros on their own database. FedNow is cool because anybody who has an account at the Federal Reserve, whether you're a credit union or a financial institution, you have access to doing these instantaneous payments. And what that means is now they can offer better experiences to their customers, whether it's through you know, your banking app or something else to do instant payments, including to merchants. That's very cool. That's actually good for business in the United States. Now, like in terms of where that goes for a company like Ripple really benefits from more efficient domestic payment systems. And I think one thing that we learned very early on is that domestic payment systems, while they are not perfect, like buying a cup of coffee today with a credit card with Visa, not that bad, right? Like the actual rails themselves aren't that bad. Where you run into a little bit of trouble is the actual mechanics around the dollar itself and the infinity printing press that goes up. But putting that aside, like domestic payments are actually decent today. FedNow is going to make that a little better. There's going to be other innovations as well. The real problem in payments, like the one that hurts the worst, is how you string together international payments. Because for domestic payment, usually you have a central bank, and that central bank is able to do things as fast as they want to because everything reconciles to their ledger. On a cross-border basis, you don't have a supranational bank. There's no bank of banks, right? Unless you're talking about Citigroup. And so getting rid of those correspondent banks and just connecting to hyper-efficient domestic systems, that's a future where you could have instantaneous cross-border payment from, call it US to Japan, for fractions of a penny. And you know, that's not going to use a currency to do that, a government-denominated currency. That's going to use a crypto asset, and XRP is really well suited for that.
Let's finish out the video with Jerome Powell taking one of the curveballs from Sarah. Along with a final question, Andrew Bailey volunteered to answer, with Mr. Ueda putting on his finishing touch. Until next time, do take care. Sayonara for now. Bye-bye.
It's so uncertain right now. In my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Is Europe in recession, President Lagarde? I mean, we've seen 2 negative quarters of GDP. I don't know how you define it. But
I think the first quarter of 23 was actually completely flat, wasn't negative. So technically, I think you could argue that we did not see a recession, but it's stagnant, to say the least. And the expectations for Q2, particularly in the industrial sector, if I look at PMI numbers, are not particularly are not giving us great hope that there will be a strong recovery. We see a second half of 23 up from the first half, certainly, but moderate. We have a 0.9 forecast for the whole year.
Do you agree with Chair Powell? Do you think you can get away with this tightening cycle without dragging Europe into recession?
Our baseline does not include a recession, but it's part of the risk out there.
I asked if you guys coordinated or talked about monetary policy before. I mean, does that happen? Should it be more coordinated? Because you're all doing different things right now.
Well, I mean, I'll start. I mean, obviously what we don't do is say, what shall we do, what shall you do? Because we're all setting monetary policy for our areas, and that's the law in all of our areas, actually, so we don't do that. But we do talk a lot, and I think it's important. I mean, it's important at all times, but it's particularly important in recent times at the moment because we're facing such big global shocks. I mean, we've got common shocks. They differ a little bit in terms of their impact and their effect, but there's some huge global events going on that are affecting all of us. So, I think we do talk quite a lot and we see each other quite a bit because it's important we do that. And, we share wisdom on how we're sort of interpreting the things that are going on around us.
Yeah.
I guess we are in a flexible exchange rate world, so we do policies independently. But of course, we exchange information, which is very, very valuable.